everyone. Welcome to Sam's Summaries. This episode is a deep dive discussion into Sam Fury's summary of the introduction from the book The Only Cryptocurrency Investing Book You Need by Freeman Publications. It has been created with the help of AI. The introduction is subtitled The State of the Cryptocurrency Market in 2022. You can read the original post at samfury.com.
All right, welcome back, everyone. Ready for another deep dive? Today, things are going to get kind of interesting.
Oh, interesting how. Got some juicy source material for us.
Juicy might be an understatement. We're taking a look at cryptocurrency, but with a bit of a time warp twist. See, our source is notes summarizing the introduction of a book called The Only Cryptocurrency Investing Book You Need.
Catchy title.
Right, but here's the thing. The book's from 2022.
And we're smack dab in the middle of 2024. I see where you're going with this.
It's like we've got a message in a bottle from the crypto past. We're going to see what they got right, what they got wrong, and what it all means for us here and now in the crazy world of crypto. Think you're up for the challenge?
Always game for a good time warp. Let's see what this crystal ball from 2022 had to say.
Well, right off the bat, it makes a pretty bold statement. It claims cryptocurrency could be the first brand spanking new asset class in over a century.
Whoa, first new asset class in a century. Oh, that's a pretty big claim.
It definitely grabs your attention. But is it hype, or is there something more to it? You're the expert here.
So an asset class basically groups together investments that tend to act alike out there in the market. Think of it like categories.
Categories for your money, basically.
Exactly. You got your stocks over here, bonds over there, real estate doing its own thing, and of course the shiny stuff, gold. These are like your classic four asset classes.
The OG investment crew.
Right. And they're important because they usually react to economic changes in similar ways, good or bad. Now, investors, they're always looking to spread their risk, not put all their eggs in one basket, right? That's where this whole asset class thing becomes crucial for diversification.
Don't put all your eggs in one basket. I like that. So you're saying if you spread your investments across different asset classes, you're kind of protecting yourself.
Exactly. If one asset class takes a hit, like let's say the stock market throws a tantrum, well, your bonds might stay chill, maybe even go up a bit. You're not riding the roller coaster with all your money tied up in one car.
Makes sense. Spread the love, spread the risk. But back to crypto. Our source claims it's not just another stock or bond, but something totally different. What makes it so special in their eyes?
Ah, that's where the magic word comes in. Decentralization. See, unlike your typical stocks or bonds, which are issued and managed by companies, governments, big institutions, crypto marches to the beat of its own drum.
No boss. Totally independent.
Pretty much. We're talking about a system built on a distributed ledger, the infamous blockchain. Instead of one big authority calling the shots, you've got thousands of computers all over the world maintaining this record of transactions.
Okay, pause for a sec. Blockchain. We hear that word tossed around all the time, but can you break it down for us? What's happening on this digital stage?
Picture this, a giant public digital ledger. Every single crypto transaction gets recorded on this ledger, and a copy of this ledger is stored on tons of computers across the globe. That's the distributed part. Now, every time a new transaction happens, it gets bundled up into a block. To add this block to the ledger, a majority of those computers have to agree on its validity, double-check everything's legit. That's the consensus part. And it's secured with some seriously hardcore cryptography.
So it's like a massive, constantly updated spreadsheet, but way more secure because everyone's watching and has to agree on any changes.
You got it. And that's where the decentralization power comes in. No single person or institution can just waltz in and manipulate the system because they'd need to control a ridiculous number of those computers, which is basically impossible. That's what gets folks excited about crypto. Our 2022 source even suggests it could be a safe haven during, say, a stock market crash.
Right. They talk about financial markets potentially collapsing and how crypto might be a way to dodge the fallout. But decentralization alone doesn't make something a safe haven, does it? What else is at play here?
Well, the idea is that if the traditional financial world goes haywire, crypto, being detached from that whole centralized system, might just weather the storm.
Sort of like an escape hatch. While everyone else is panicking, crypto's just chilling on its own blockchain island.
That's the theory, at least. People might flock to crypto, see it as a more stable alternative, and potentially drive up its value.
Interesting. So there's this potential for crypto to stay steady, maybe even thrive when everything else is crashing down. That's a pretty powerful idea.
It's a compelling argument, but remember, no investment is without risk. Crypto might be detached from traditional systems, but it comes with its OWN set of risks, and volatility is a big one.
Yes, volatility. The crypto roller coaster, as some call it. Ups and downs, twists and turns.
hmm
You never quite know what's coming next. But hey, that's part of the excitement, right?
For some, sure, but for others, it's definitely a source of stress. And speaking of things changing fast, our notes from 2024 mention something pretty intriguing. They say countries are making a shift. Now, 2 years ago, that might sounded cryptic, but here in late 2024, is this prediction coming true?
Things have been getting pretty wild in the world of crypto lately. Big changes, big players entering the scene. What's going on?
We've seen a pretty significant shift, that's for sure. It's not just individual investors and companies dipping their toes into crypto anymore. Whole countries are starting to explore central bank digital currencies, CBDCs, they call them.
CBDCs, that's
Yes,
like digital versions of regular money, right?
yeah,
A digital dollar or euro, but with a blockchain twist.
exactly. They're basically digital versions of a country's own currency, but built using blockchain tech. The twist is they're still issued and controlled by the government, the central bank. So it's kind of a hybrid situation. You've got the efficiency and security of blockchain, but it's not exactly the same as decentralized cryptocurrencies like Bitcoin.
So it's like governments taking the cool tech of blockchain, but keeping their hands on the controls. It's not quite the power to the people vibe that Bitcoin started with, is it?
It's a very interesting evolution, that's for sure. You could almost say there are two branches of digital currency emerging, one pushing for that truly decentralized future like Bitcoin, and the other taking the technology and adapting it within the existing financial systems. It's a bit of a tug of war.
A digital currency showdown. Makes you wonder what the future holds. But with all this government and institutional interest, it's tempting to think, hey, maybe I should jump on this crypto train too. And our 2022 source doesn't hold back on the advice. They actually suggest putting 10% of your entire investment portfolio into Bitcoin.
10%, that's a pretty bold recommendation. Definitely not your typical financial advice.
Not for the faint of heart, that's for sure. But is it good advice? Is 10% too much, too little? What factors should our listeners be considering when making this kind of decision?
This is where things get tricky. Blanket financial advice, like saying everyone should put 10% into something that's rarely a good idea. What works for one person might be disastrous for another. You got to consider your own individual circumstances, goals, risk tolerance, all that good stuff.
Right. One size doesn't fit all when it comes to investing. You really got to know yourself and your financial situation.
Absolutely. A 10% allocation might make sense for someone who's comfortable with high risk, has a long-term outlook, and truly believes in the potential of Bitcoin.
Someone who can stomach the roller coaster, basically.
Exactly. But for someone closer to retirement or someone who really values stability, 10% might be way too much. It all comes back to diversification, spreading your risk wisely. Don't put all your eggs in the crypto basket, no matter how shiny it looks.
Solid advice. Spread those eggs around. But our source also claims it's not too late to get into crypto. Are they right? Have we all missed the boat already?
Well, here we are in December 2024, the crypto market, as lively and unpredictable as ever. Has it grown since 2022? Absolutely. Has it peaked? Impossible to say for sure.
So the window's still open.
It seems that way. There's still potential for growth, but let's be real, the potential for loss is there too. It's a high-risk, high-reward game. The question each listener needs to ask themselves is, how much risk am I truly comfortable with? What can I afford to potentially lose?
Right. And speaking of risk, let's talk about the elephant in the room, volatility. Our source warns about big, scary dips in the market and says investors need to be mentally and emotionally prepared. What causes these wild swings, and how can people brace themselves for the ride?
The crypto market is influenced by a whole bunch of things. Market sentiment, news about regulations, technological advancements, even a single tweet from a certain billionaire can send things soaring or plummeting. It's a highly speculative market, very sensitive to all sorts of external factors.
So emotions run high, and prices follow suit.
Pretty much. That's why our 2022 source talks about the buy and hold strategy.
Buy and hold. So you're saying buy your crypto, hold on tight, and don't freak out when things get bumpy.
Exactly. It's about focusing on the long-term potential, not the short-term fluctuations. If you truly believe in the underlying technology and think it has staying power, riding out those dips can pay off in the long run.
But that takes serious guts, doesn't it? Not everyone can handle seeing their investments dip and just stay calm.
It definitely takes a certain type of investor, someone with patience, a strong belief in the long-term vision, and the ability to stomach those inevitable dips. It's not for everyone, that's for sure. And it's especially important to remember when we start talking about altcoins.
Ah, yes, altcoins. All those cryptocurrencies that aren't Bitcoin. Our source makes it sound like that's where things get even riskier. What should our listeners know before they go diving into the world of altcoins?
Well, first off, altcoins are a super diverse group. Some have really interesting applications like decentralized finance, managing supply chains, even creating digital art. But the thing is, they tend to be way more volatile than Bitcoin.
Even more of a roller coaster ride.
You could say that. They're generally less established, and you really got to do your homework before investing.
So more risk, but also more potential reward.
Possibly. But you got to understand what you're getting into. Research the specific purpose of the altcoin, the tech behind it, the team developing it. Due diligence is key.
Don't just jump in blindly, folks. Do your research. Well, our time-traveling deep dive is coming to an end. We've journeyed back to 2022, looked at their predictions for crypto, and seen how things are shaping up here in late 2024. What are the key takeaways our listeners should be thinking about?
I'd say the big ones are decentralization, diversification, risk tolerance, and that ever-present volatility. These are your compass points when navigating the crypto world.
And that world is changing fast. What seemed revolutionary in 2022 might be old news today, and who knows what's coming next.
Exactly. It's a constantly evolving landscape, and that's what makes it so fascinating, and maybe a little bit scary too.
A healthy dose of both, I'd say. But hey, that's what makes this deep dive so interesting. And speaking of interesting, here's a final thought for our listeners to chew on. Knowing what we know, N-O-W, in late 2024, what's one question you'd ask the author of that 2022 crypto book? What surprised you the most about how the crypto world has unfolded?
That's a good one. What surprised me the most, I think I'd have to ask them, what's the one thing they wish they'd known back then that would change their perspective on the future of crypto?
Ooh, that is a good one. Makes you think, doesn't it? Well, folks, keep those crypto brains buzzing. Do your research, stay informed, and until next time, happy investing.
Happy investing.
Thanks for tuning in to Sam's Summaries. If you found this episode useful, let us know with a like, follow, and share. Also, if you haven't already, be sure to visit samfury.com to get free access to all of Sam's original summaries, which you can download as PDFs, as well as other exclusive content. It's all completely free at samfury.com.